morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Wednesday, May 7th. News that U.S. and China would meet this weekend to hold initial trade talks was enough to spur higher trade across the ag space overnight. Tomorrow, U.S. Treasury Secretary Bessent and U.S. Trade Representative Greer will be traveling to Switzerland to meet counterparts from China this weekend. Both sides have confirmed this weekend's meetings, which are expected to be mostly preliminary in nature while just trying to de-escalate the heightened trade tensions. As we approach the pause, corn right now is 5 to 6 better. Wheat ranges from steady to 4 higher, while beans are the upside leader, 12 to 14 better. Meal is up $2, while bean oil is up about 60 to 65 points. In other news, China overnight, their central bank did indicate that they would cut interest rates while injecting additional liquidity into their financial system to support the domestic economy in response to the trade tensions with the U.S. Hong Kong's Hang Seng Index was up 1.5% following the announcements. In other world news, India did launch military strike in Pakistan and in Pakistan-controlled Kashmir region overnight. This in response to a deadly attack on tourists last month in India that killed 26 people. New Delhi has blamed Pakistan for last month's attacks. Pakistan has threatened to hit back as the two nuclear-armed countries face off. Weekly ethanol production later this morning. Production is expected to come in about 305 million gallons, just below last week's EIA estimate, and that would be in line with the amount needed to reach the current USDA corn usage forecast at 5.5 billion bushels. Wire services, they're starting to roll out expectations for next Monday's USDA WASI report, which is their first glimpse into the new crop 25-26 balance sheets since the March 31st planting intentions report. Very little change is expected in the old crop wheat and soybean balance sheets. In corn, the average estimate for ending stocks is down 20 million bushels to 1.445 billion. We're looking for a slightly larger cut. We're down 25 million bushels. That with exports up 50 million, partially offset with a 25 million bushel cut to feed usage. Corn production in 2025 is expected to jump over 900 million from last year to just under 15.8 billion bushels due to the higher acres. If realized, this would be a record high. Ending stocks are expected to come in just over 2 billion bushels. Bean production expected to reach 4.338 billion, just a touch below a year ago. Despite the cut in acres, the average trade guess on ending stocks at just over 360 million bushels, just a smidge below the current marketing year. The average guess on all wheat production at 1.885 billion, that's down nearly 90 million from a year ago. Weather-wise, warm, dry conditions across much of the nation's midsection will promote good planting progress this week. July corn has rebounded back to about the midpoint of Monday's sizable sell-off. Support is at 450 with resistance at Monday's high at 470 3/4. Resistance for July beans is at last month's high at 1067.5 versus the overnight high at 1056. I think to breach this level, I suspect we'll need to see something a little more tangible evidence of progress being made with weekend talks with China. And in wheat, improving crop conditions here in the U.S., I think will limit the upside as speculators just continue to take advantage of the big carries in the market, rolling their short positions forward. Perhaps we'll generate a little bit of a short covering bounce here from the news in Pakistan and India squaring off. Thank you for listening, everyone. I hope you have a great day.